What's up, guys? This is Ryan Lee with the Financial Freedom Formula. I'm glad you're joining me on this video again today. And I'm going to go off script a little bit today. I'm not going to go to the Financial Freedom Formula, although I am going to give you some of the valuable content and information inside of the formula. But last week I had an opportunity to attend a conference, a seminar, and Tom Wheelwright was at the seminar, and he kind of got me fired up again about the concept of taxes. Now, I know, how would anyone get fired up about the concept of taxes? But Tom Wheelwright, if you've ever watched or listened or read any of his books, this guy looks at the tax code as a blueprint, is really what he calls it. And he tells us that the tax code is 100% fair. We like to complain and whine and yell that it's not fair, we pay too much taxes. But what Tom Wheelwright said in his presentation last week is that it is 100% fair. And in fact, that the tax code will tell us exactly what we need to or should do right now if we want to literally pay zero in income taxes. So what I'm going to do is I'm going to introduce some of these strategies to you based on what Tom Wheelwright shared with me. Now, if you want some of the resources that I'm going to share with you in this video, text cashflow to 797979. Cashflow to 797979. But I'm going to go through three concepts here that Tom Wheelwright shared. So first, you guys have all probably seen this, and we're going to call this how to collapse time in your financial plan. And in fact, let me give you a little bit of context on what I mean by this. Most people look at time based on 2 points, right? Where you are today and where you want to be or where you're going to be tomorrow. And it's just 2 points. In fact, 24 hours from today is going to be tomorrow, and 24 hours from tomorrow will be the next day. And so it's very linear, and there's not much we can do about that. I'm going to show you how we can actually bend time and change the rules, but I'm going to give it a little bit of context first with Tom Wheelwright. Now, Tom Wheelwright, he follows the Rich Dad, Poor Dad formula, and he talks about this quadrant. And in this quadrant, there are basically four categories of people, or four categories of how you can be taxed. There is an employee, there is a self-employed individual, there is a business owner, and there is an investor. Now, what Tom Wheelwright says is there are basically four different tax codes that go with each one of these quadrants or categories. So ask yourself, where does the majority of your taxable income come from today? In the employee section, he said that you have the potential of paying upwards of 40% of your earned income in tax when you add up federal tax and state tax and all of the other taxes, Social Security, Medicare, all the other taxes that are associated with your earned income as an employee. He said if you're a self-employed person, because you don't get the benefit of having your employer help you with Social Security, you end up paying 60% tax. 60% tax. Now that's crazy. Can you imagine working, most self-employed people work harder than employees because they own a business that they have to do everything in, right? And giving up 60% of your earned income in taxes, that is crazy, right? But this is kind of what he's talking about. The tax code is a formula to tell you how to pay less in taxes. So we have to know first where we're at. Are we paying 40% tax or are we paying 60% tax? Now, if you're a business owner, you have a lot of opportunities for tax deductions, right? And so you only end up paying taxes after all of your expenses have come out first. So as a business owner, he says you pay about 20% in total tax, right? 20%. Now that's a big difference. Imagine this. You're an employee working for a business owner. Your earnings are capped and limited, but yet you pay more taxes than the business owner. Now the business owner has the upward potential of having, massive income. I mean, think of all of the successful businesses out there, from Apple to Facebook to all of the local businesses in your geographic area, right? How much are those business owners making? Now, hopefully they're making a lot, but the reason that they're making a lot, and probably the reason that they're a business owner, is they get to keep more of their income. They're using the tax code as a blueprint to help them understand how to keep more income. So here's the cool part. The investor, if he invests correctly using the tax code, can pay zero, nothing in taxes. Now, he actually went through this, and we're going to go through some of the math on this to really demonstrate this out. But how big of an impact does taxes actually make on your investing? And most employees, right, what do? They invest like employees. They put their money in a 401k, and there are zero tax advantages associated with a 401k. Now, your CPA, not Tom Wheelwright, might have told you that there are tax advantages by deferring your tax. But investors paying 0% tax, they're not deferring their tax, they're eliminating it by choosing the right investments. So let's just do a quick bit of math and talk about how impactful taxes can be. All right. So we're going to line this up here. So let's just use really small numbers to start off with, right? Let's say you've got $10,000 that you're going to invest. And let's say that you're going to take this $10,000 and you're going to invest it for 30 years on two sides here, 30 years. Okay, and on both sides, let's just say you can earn 10%. Now, in the stock market, that might be far-fetched, but let's just nonetheless say we can earn 10% and keep this super apples to apples. Okay, so $30,000, or excuse me, $10,000 compounding over 30 years at 10%. So I'm going to bring down a calculator here, and we're going to do this math. And I'm going to do this for you in a couple of different ways so you can really see how impactful this tax can be. So $10,000, 10% over 30 years, right? If we do our math there, we should be earning about $174,000. So let's keep this up here, $174,000. Now, how did you invest this? Where did you invest this? If you invested this like an employee, do you actually end up with $174,000? The answer is absolutely not. Let me bring down another calculator here and kind of show you what I'm talking about, okay? Now, if you're looking, these calculators are called Truth Concepts calculators. They're awesome calculators. Help to demonstrate the truth in any investing. So we've got our $10,000 going in one time, earning 10%. Here's our $174,000 all the way down here at the bottom, okay? So same calculation. I'm just breaking it out for you over a period of 30 years, okay? Now, if you're an employee and you're taxed at 40%, what happens, right? You earned $1,000 in that first year, but guess what? You didn't get to keep it, right? That $1,000 that you earned, 40% came off the top, and now instead of earning interest on $11,000, right, without the tax, now you're only earning interest on $10,600. $400 of tax came out, $10,600 stays in, earning 10% next year. Now you earn $1,060. But guess what? Your tax bill just went up. And every single year, your tax bill goes up and up and up and up. And notice this, down here at the bottom, what you really end up with is $57,435. Okay, so let's write this down, $57,435. Now, the only difference here is on the left-hand side, we're taxed at 40%. On the right-hand side, we're taxed at 0%, right? Now, that's a pretty big difference, 174 to 54. Now, if we're looking at that just on a small macro level, most people would say that's not terrible, right? I mean, $100,000, $170,000 is definitely bigger than 54, but is that really terrible? Let's just look at what the difference is. 174 versus 54,435. That is a 68% difference in wealth, in cash flow, in income, in possibility, simply by knowing how the tax code works. So the goal of what we're doing here at Cash Flow Tactics, the goal of everyone should really be this. Utilize the tax code to your favor, right? As Tom Wheelwright said in his book, he said, guess what? The IRS tells you exactly what you need to do. If you're a self-employed individual, you need to start shifting your money to an investor. You can still stay self-employed, but you need to start acting like an investor with your dollars. If you're an employee, you don't want to invest like an employee, putting your money into a 401k. You want to act like an investor, investing in assets that give you legitimate tax benefits. Now, what might those assets be? Well, that's everything we talk about here at the Financial Freedom Formula. It's real estate, it's life insurance, it's owning and operating a business. There are few assets out there that legitimately give you tax benefits, allowing your money to grow independent of taxes or tax-free. So what we want to do is we want you to be here, right? We want you to have more wealth, and the blueprint that we've created for you, let me open up this blueprint here. The blueprint that we've created for you is the Financial Freedom Formula. It is literally a step-by-step formula of how you can exit the rat race by knowing how the tax code works, among other things, to achieving more wealth in your financial life. And one of the sections in this Financial Freedom Formula is actually in step 1, how the looming tax disaster will destroy your retirement and what to do about it. So in this Financial Freedom Formula, you can actually download a single chapter of Tom Wheelwright's book that talks about exactly what I shared with you here. How the taxes are literally destroying your wealth, and if you're playing by the rules of employees and self-employed individuals, you are losing the game of finance. So guys, join me on the next video. I'm going to go a little bit deeper on this concept, and I'm going to talk to you about how to literally collapse time, how to change all of this and collapse time. So join me on the next webinar. Download your version of the Financial Freedom Formula by texting CASHFLOW to 797979. CASHFLOW to 797979. Ryan Lee signing off. We'll talk to you next time.